policy is in the pension plan, absolutely, because it's automatically deducted as part of the pension contribution. If it's a let's call it a non-qualified deferred comp plan, and the employer is funding this, what they're doing is that they're deducting it as salary. This is the bonus 162 type of thing, deducting it as salary, and even maybe a bonus on top of it to pay the taxes. They're paying it out to the employee as income, and they're going to declare it as income, and then they're using that to buy the policy, and it's for the employee. The employee is the owner of the policy. The employee names their own beneficiary. They have access to the policy unless they put together some sort of golden handcuff kind of a thing in the vesting provisions. But generally, that's how that would work. So it's not really tax deductible because of a premium. It's tax deductible because they're doing it as income to the employee. In that part, that's where that works. A key person policy where the business is going to be the ultimate beneficiary. So suppose you have a very valuable person, a CEO, CIO, CMO, CEEI, whatever, whoever that is, and they get a key man policy on them, they cannot deduct those premiums, because if they do, then the proceeds are taxable.
Taxable. Yep. Yeah, absolutely. And that's a big problem.
That's a big problem. And here's the thing. I'm not going to be their CPA, but I will certainly make sure that I have a document that says these premiums are or are not tax deductible according to whatever. Show this to your CPA. I will not be responsible if your CPA says you can deduct it and we tell you you can't. And here's why. I have no problem doing that, because there's too many stories on that. And that doesn't mean the government finds out that that money's taxable. I just don't want the liability.
Yeah. Well, and if it's done the wrong way and you don't say anything, you better have great E&O insurance.
There's that. Well,
it's going to be a rough time for you.
There's a guy, he does, I follow some car channels. So this one guy, he says, I am the warranty. Well, I am my best E&O coverage, but that doesn't mean I want to be without E&O coverage. But
right.
I'm like, I dare you to get something past me. I mean, I'm at that point. It's like, I dare you to even try, because I'm so on top of it usually. And if I'm not on top of it, I usually know where to get the exact right information to make sure I'm on top of it. Appreciate Daryl. Thank you very much. So yes, premiums can be deducted by a business. Usually not, but there are some possibilities, and usually it's deducted because of income, as income being paid to someone, not necessarily because it's a premium. So, right. Yeah, if that makes sense, wow, I love when I can make these make sense, because if I can make it simple, that's going to be really good for the business owner course I'm working on. So if I make it simple, everybody gets to do better. So I think we'll leave it at that.